So what we will do is I will start off assuming, this is the first time you're attending. Okay. I'll go through the basics. I'll explain you a few things, and I'll also try to explain you how the platform works, etc. And try to give you some idea into how you can effectively use it, right? Or how some of the people already are using it effectively and how you could essentially use it. Let me start. You all know 915trade.com is the platform, and the idea, what we try to do in 915trade.com is try to look at markets slightly differently. Okay. We don't want to look at markets the same way that we have been used to, right? For decades, in fact. There was only one way of looking at markets, which is basically you have got, charts and trading view charts, etc. And price is the center point, and we try to analyze everything based on price. We then add RSI indicator, a lot of indicators on top of that. Try to understand what price is trying to do, etc. The whole idea is add as many indicators. We start with RSI, MACD, pivot points, moving average indicators, oscillators, including RSI and many others, to help us understand, identify momentum, identify support and resistance, identify price areas, liquidity areas, etc., etc. The whole point has always been around to understand what price is trying to do. We were trying to analyze price itself. What we thought was the driver, the price is moving because of volume. Right. So we wanted to understand volume more than price. For our own personal goals, we wanted to understand why price is moving. We did not want to do anything with price. We didn't really want to do any analysis with price. Rather, we said, okay, let price stay aside. Let price tell us what is it doing. But then why it is doing and what it might do eventually, we wanted volume to tell us that story. Okay, not the price itself. But how do we do it? It's easier said than done. The only ways you can look at volume is candle volume, which doesn't tell you a very good story, to be honest. Volume profile and all, if you build also, they don't tell you a very good story, especially for assets like Nifty and all that, right? They don't give you a very good story because intraday traders, if you're trying to trade intraday, they don't give you a lot of confidence unless you have got a P or you have got a B in the volume profile. You don't know what is going to happen in the next day. Even if you get a P and a B, problem with volume profile, you have got something called as a P and a B and all that. So even if you get that, the problem with Nifty is that the next day it suddenly does a gap down and your P goes for a toss, your B goes for a toss. You can't really, because this is not a continuous market, right? Volume profiles in other markets, actually they make sense because, it's a continuous market. So, there is no sudden gap up and gap down. We have seen just 2 days before the market gapped up 200 points. Now, a volume profile, whatever shape it has made yesterday is irrelevant, right? Because 200 points gap up, what do you make of it? It is very difficult to analyze anything like that. Volume alone, it is very difficult to make sense of what is Nifty or Bank Nifty trying to do. Then what do we look at? The other next important thing we have is open interest. So how do we make sense of open interest? Open interest is good. It is actually very good. We couldn't do anything concrete with open interest because open interest had a lot of volume or contracts which were not essentially moving the market. I'll tell you why. So open interest always has 1 month before contracts, 1 week before contracts. It is carrying contracts that are built for ages, right? They've taken their positions. They are not exiting. They are only modifying it slightly, but their majority of their positions are lying there just like that. These positions are not moving the market. The new positions within that OI, change in OI, you could say. But then even the change in OI becomes a little bit problematic. When you see our data, you will understand. The change in OI is essentially what really matters. But then the change in OI itself, it is not that easy to, it doesn't give you a good picture because overall, when you compare it with the OI, it is very small, or it doesn't give you the intensity with which sellers are trying to move the market at that moment. So we felt we were still lacking something. And then in the process of trying to solve this, we figured out a way to analyze the data. And that is what we have tried to build as part of 915trade.com. Okay. Now, what does the platform essentially do? You can go to live charts and you can click on Nifty and you will get 4 charts. Essentially, that's all there is to it. There's not a lot. Yes, of course, we have got a few new screens added, but they only complement this. The idea is not to make it too complicated. We wanted to keep it as simple as possible, and we wanted to give you a sense of how the markets work within as simple charts as possible. We know that market has tools wherein They can tell you at each strike whether calls are building up or whether puts are leaving their positions, whether calls are building aggressively, puts are liquidating aggressively, etc., etc. Now, for ourselves, it is very difficult to understand when you're looking at like that. From where they are liquidating, from where they are not liquidating. Understanding that is not an easy thing. So we wanted to really keep it simple. Something that once a person understands what they are doing, they should be able to follow it easily. That is the whole idea. That is what we wanted to basically try. Essentially, to achieve that, in the process, we have also figured out volumes, managed to compute volumes that would help us understand this much better. And that's how we got this dashboard. Okay. So in the live, all of our subscribers would look at this data only. Now, what do they look at this data? There are 4 charts here. The first chart essentially gives them an idea on how futures buyers and sellers are trying to do in futures. Now, this might, at the first, it might actually confuse you. So in the entire dashboard, we try to look at data volume from buyer and seller point of view. Now, when we look at future data also, we have got seller and buyer. Essentially, it is who opened the contract first. So sell side contract opened first or buy side contract opened first. That's how we basically count buyer and a seller. So if sellers are aggressively opening their contracts, that means, sell side contracts are increasing. If buyers are aggressively opening their first contracts, then buyers basically are increasing their position. That's how we look at it. Okay. The difference is who is more aggressive. And then we also try to see a difference, whether that can tell us, a story. Today, there was not a lot of a difference, to be honest. Buyers and sellers, they were fighting it out throughout the day. They were very close. The difference was not understood from here, but the difference actually came from the other charts. Now, this is, like I said, futures, buyers and sellers. And then we also have got on the left bottom side, you can see Nifty spot candles. Now, like I said, we try to keep price a small part of the entire game. And majority of our subscribers now, they do not do a lot of analysis on price. They may still be using their own indicators and price-based analysis, but their end decision essentially happens based on volume, not based on price. And hence, we don't do anything on price either. And also what happens is a lot of our subscribers, they keep asking us for some features here and there. They ask us, can I do here? Can you help us do this and do that? I have not seen one person who come to us and say that, can you add an indicator on the price? Once everybody understands the platform, I've not received a single request who said, can you try to enhance this? Nobody asked us anything to enhance this, in fact. So price, they're all used to it so much that we hardly ever get any requests on enhancing this part of the functionality, because everybody is used to analyzing the price based on volumes itself. And that's the power of the platform. Okay, so that there is a futures buy and sell, there is price. We see the spot price. We don't see the futures price because spot essentially tells us which is the ATM strike. So based on spot, I know what is my ATM strike. And then on the bottom right corner, if you see this icon, by default, it will come like this. But I am used to seeing high and low because now this gives me an ability to see call sellers dominant on the upside, put sellers dominant on the downside. Essentially, sellers top, buyers bottom. Because if you look at any market now, we all know that sellers ideally sit on top of the candles, buyers sit at the bottom of the candles. They try to push the price up, they try to push the price down. Now, in our markets, from options point of view, how does it translate to in our market, right? In options market, not in our market, but any world market option markets. When we say sellers, we are talking about call sellers. When we say buyers, we are talking about put sellers, right? Because options is predominantly a seller's market. I'll give you with an example why options is a seller's market and why we only track sellers here and we don't track buyers here. I'll just explain with an example. Let's say that Grow, okay? Grow is getting listed. Grow, you all know Grow, right? Grow is a trading platform. You all, I'm sure most of you have account in Grow. Grow is not listed yet. It is still a private limited company. They are trying to get to listing. I'm assuming they are trying to get to listing. Let's say, okay? Assume they are. When Grow is going to the market, they have a fixed capital. Okay, a company has a fixed capital. Let's say SEBI and everybody, SEBI and whoever is involved in the process, the government organizations and also the auditors, they look at the company data and everything. They decide saying that, okay, 100 crores, not 100 crores, let's say 10 billion is the valuation of the company. Okay, now for 10 billion, they will then decide what should be the share price. If they want it more affordable, they'll keep it in the range of 50, 60, 40, or they can keep it in the range of 1,000. Some companies keep it in the range of 1,000. Some companies keep it in the range of 50, 60 and all that. So let's say 1 crore is their capital and they are saying that 100 will be our listing fees, which means that roughly it will come to 1 lakh shares. I'm just taking an example. It won't be that. It will be obviously much, much bigger. Assume the valuation is 1 crore. saying that the face value is 10 or 100, we will have 1 lakh equities for that company. So SEBI will say that we will let you list your 1 lakh equities in the market. Your current price is 100. You can obviously, expect a slightly higher. We don't have a problem if you go to the market with 120, 130, 150 for that matter as a list price. That's what companies do so that they can raise more money. Correct. So they have got 1 lakh shares. They say that we will issue either new shares of 50,000 or we will existing shares we will exit and we will allow 50,000 shares, let's say. So what essentially they are saying is new 50,000 shares they will issue, and they will also issue 50,000 of their existing shares also they are exiting, which means that the overall shares at the end of it will be 1.5 lakh shares. Okay, 1.5 lakhs is the total equities that are available. 50,000 are with the promoters or the board. 1 lakh is floating in the market. Okay. Stay with me. 1 lakh shares are floating in the market. Now, every day when somebody is trying to buy and sell, they can only buy and sell part of these 1 lakh shares, isn't it? They cannot sell more. They cannot buy more. Once, let's say that everybody bought 1 lakh shares and nobody is willing to sell, what will happen? There is no liquidity. If nobody is willing to sell, the price will try to go high, but there has to be some seller. No, price is stuck. It can't go high. It can't go down because nobody is selling. Nobody wants to exit. People will keep demanding more and more. They will keep raising their bids for higher price. But if there is nobody to sell, you can't buy, isn't it? So if the 1 lakh equities that are floating in the market, if they're all bought and nobody is willing to sell anymore, you can't buy. Correct? Everybody agree? Right? Let's change that to options market. Okay. You all understood that every company has a defined number of shares. Only those many shares are floating in the market, right? In terms of companies, ICICI Bank, same story. HDFC Bank, same story. Tata, same story. Take any company, Adani, Ambani, any company, they are all the same story. Come to options market. Now, price was in the morning at 24,900 or 25,000, let's say it came to. At 20, decide how many contracts can be traded. Who decides how many contracts can be traded at 25,000? Assume this is basically a company, not Nifty. Assume this is Grow itself, or let's say Tata Enterprises or Mahindra and Mahindra. Let's say Mahindra and Mahindra, they have got, let's say, 10 lakh equities floating in the market. I'm just giving an example. When it comes to options, at 25,000, Mahindra and Mahindra 25,000 strike, how many contracts can be executed? Can anyone unmute and tell me? What do you think? How many contracts? What is the limit, the number of contracts that can be traded at that strike? Any idea? Girish, equal to seller's quantity. But then is there a cap? How many contracts do you think you can sell? Is there a number? Assuming that company has only 10 lakh quantities in the market, how many option contracts can be executed? Anybody? Only 10 lakhs, Dhanpal. Anyone else? Any guess? There is no limit, Girish. Anyone else? Venkat never thought of it. Okay, fair enough. But what is the limit still? Is there a limit? I mean, if only 10 lakh quantity is there of share, if 10 lakh shares are floating in the market, from options contracts point of view, how many contracts do you think there is what is the upper limit for a strike, for any strike? You're saying 10 lakh is the limit because 10 lakh equities are floating. Correct. So now think about it. I'll ask you the same question slightly differently. The original idea of options was to help you hedge against your investments in the company. The reason options came into existence was if I have 10,000 shares of Tata Enterprises, I don't want a lot of loss. So I want an insurance when the price drops 10%, let's say. So at a 10% strike, I want to sell my contract so that I have some insurance against the price going sideways or south against me. So that was the whole idea. The options contracts came into existence. Options contracts came because the idea was to give some kind of an insurance for investors who have invested in or who have got equities in the company. Now, do you still think your answer wouldn't change your answer? So, okay, fair enough. Let me answer. There is no limit. The weird bit is there is no limit. There's absolutely no limit. If there are 10 lakh contracts of, let's say, assume, of course, there are none for Nifty, but let's say that there are only 10 lakh equities floating in the market. You can do 10 crore contracts here. There is absolutely no limit, right? Because this is not a company who has it's a derivative, right? They are saying anyways, this is a speculative thing. So do speculation. Why are we stopping you? There is absolutely no limit. Well, some of you might do research and come back and say, no, SEBI stops you at 100 crores, 200 crores. That is for big companies. They have some limits. Okay. But overall, if 1,000 companies are coming together and they are trying to do, they can go to 100,000 contracts. They can go to 100 crore contracts. SEBI is not going to stop them. But what will stop? What will, limit the number of strikes? Okay, fair enough. Let me ask the question the other way. If there is no limit at all in the number of contracts that can be available, then who is bringing the liquidity? The liquidity is always given by a seller. The reason is, even if I want to buy, because buying is cheap, even if I want to buy, unless a seller is selling a contract, I will not be able to buy a contract. Think about it, right? This is not a fixed number of equities that you can go and buy, right? Unless a seller sells a new contract, opens a new contract, the number is zero. You don't have any contracts to basically buy. So a seller has to basically start selling their contracts. Only then a buyer can buy. So in the market, in especially a market like India, where we have got a lot of retail participation in terms of buyers, guess who controls the entire market? It is controlled by seller, because liquidity and volume is always provided by the seller. Buyer cannot open a new contract because seller has to sell, isn't it? Hence the sellers who control the market. So again, the point is the same thing. Even to be on a buyer side also, even if you want to buy, right, there has to be somebody willing to sell. The first opening contract itself is from a seller's side. Not just from buyer is always there. In Indian market, especially, buyers are always there. We always have buyer. You will not believe. In an Indian market, no, you have put buyer here, 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 you have put buyer here. You have put buyers entire market. Unfortunately, that is reality. We have put buyers in the market since morning. You have put buyer here as well. You have fresh put buyers here as well. It is because it is cheap from a buyer's point of view. And it is deliberately structured like that. Otherwise, who would buy? Think about it, right? If you are sane minded, if selling and buying cost the same thing, why would you want to buy? Because you want insurance against your investment from portfolio's point of view. You only want to sell. So buyers are given an advantage only because when a seller wants to sell, a buyer can take a risk and see if they are interested in buying, that insurance. That is the reason it is made it a little easy from buyer's point of view. Now, given that, like I said, the whole idea is the sellers control. In the options, sellers are real decision makers, and that is why we only track sellers. Today, if you had bought a contract and if you still have it open, it will not reflect here. Today, if you had sold a contract, it would definitely reflect here. Doesn't matter, you are an individual, you are an institution, we will capture all your contracts here. We do not miss out even a single contract. Every single sell contract for any strike, we will capture it and we will analyze it. That is this chart wherein we are doing strike-wise seller and buyer. When you say buyer, we are talking about put sellers. When we say seller, we are talking about call sellers. That is why red and green. So when red is high, that means that sellers are more. When green is high, that means that buyers are rather put sellers are confident. That means they are trying to push the price up. Okay. So, and we always show you ATM +5 -5. We believe that should essentially give you the entire idea. You don't need too many strikes. If we show you 50-20 strikes, it is only going to confuse you. Believe me, the decision of going next 50 or previous 50 is decided within these three strikes. Whether the price will go to the next 50 or previous 50 is only decided between these three strikes. All other strikes can put whatever pressure they want. But if seller is selling aggressively here, but sellers are not selling aggressively here, it will go till that point and then it might take a rejection. So whether it will go to the next 50 or previous 50 is essentially decided between these three strikes. Will it go to the next strike or previous strike is decided between these three. So that is why you only need to focus on 3 at a time. You don't need to focus on too many strikes. But we show you 5 +5 -5 to keep it again very simple. We then have something called as a trend line. This we keep saying, right? This is world's only trend line which is drawn purely based on volume. We do not look at price at all. This doesn't take price into consideration at all. This draws purely based on volume. If this is going up, that means volume is trying to push it up. So you should definitely be on call buy or put sell side. If this is coming down, it means price from that position, it is trying to push it down. That means that you should be on a put buy or a call sell side. So this is extremely effective. Not only that this is the world's only trend line that is drawn on volume, it is extremely effective. For almost all of them except for Fin Nifty, in some cases it is not as effective. But if you look at Nifty, Bank Nifty, Sensex, especially Nifty and Sensex, it is extremely effective because liquidity is quite high in both the cases. And you will realize that this is extremely effective. We have got a lot of traders who look at this and take their positions just based on alpha arc and trend line. Now the trend line is the real volume. The alpha arc is nothing but a smoothed version of the trend line. That's all. Just so that it removes noise and gives you overall picture of which side the market is going. As simple as that. So I've explained you futures, spot, strike wise, sellers and buyers, which is call sell and put sell, and then the trend line. That is what we have it in the platform. Very simple. We also have something called a strike wise seller trend. Now this essentially gives you, I'll remove. So this essentially gives you the same view, okay? But multiple strikes, you can see the entire day. The problem with this view is it will tell you at that point, how does it look? It doesn't tell you how did it evolve. Since morning was this the case? 25,000, what happened since morning? You can see it here. 25,000 calls were very, very strong, and then calls gave up for a little bit, puts became strong, and then calls built up again. And since once they started building, obviously they took over that position. Okay, so that is something that you could easily see here. You will not be able to see it on that chart. Now there is one more thing. The same thing you can actually see when you click on this. Same thing appears, larger window. You will be able to see it just one strike at a time. The same thing essentially is being shown to you here. I'll remove this. The same thing, it dropped, puts looked aggressive, then they came back up again and they overtook and they went. What we also did is we've added a smoothed line for this as well, so that the noise is taken out. The same seller's volume, we are doing it. We are essentially showing you with less noise, rather without much noise. This is an extremely powerful feature in the platform. I'll tell you why. Essentially, when puts are growing or when calls are growing, that when these two lines are increasing, let's say that when call line is increasing like this, it means that sellers are selling new positions. When sellers are selling new positions, it means that the price of that particular asset will fall. If you are a buyer, you will have to wait for it to slow down. Only then you will have a better buy opportunity, because sellers are not selling new positions. Buyers are anyways there in the market, and hence it will give you an opportunity to take a buy position. I'll repeat again. If you are a buyer, never buy when this line is growing. Buy only when the line is essentially slowed down or it is going down. If you are a seller, sell for as long as that line is increasing, because more new positions are sold, which means that it is good for you. It will keep melting that premium. However, the other condition you will have to remember is always analyze ATM strike. Don't look at any strike just like that. For example, in the morning, 850. Right, 24,850. Although I was not looking into the market, I was just analyzing every now and then. 24,850. If you look at it in the morning, right, when the price came to, I'll also show candles. The show candles converts the line, the actual trend line, into candles. Simple. I'll remove call and I'll try to look at put. When the price came about 936, 940, the price came. Puts were building aggressively below from the strike below that. If the price were to fall further, puts should have shown some kind of a weakness. The fact that puts were not showing any weakness meant that they are going to push the price back from that position. Right? And then the same thing again. When it came to, let's say, 24,900, let's look at calls at 24,900. That will give you a complete idea. 24,900 calls. Okay, I'll remove put. They were building aggressively in the morning, so they pushed the price down. A little bit of hesitation, then they built. Then you see what happened. They stopped building new position. It slows down and then it crashes. That is when your opportunity comes. Your buying opportunity comes when it is actually slowing down. Well, at 900 it came a little late. You will get it much earlier in 850. The same thing you will know at about 850. When these candles are kind of consolidating and slowing down, they are not forming higher high. It means that they are no more confident in that particular strike and they'll most likely exit their positions. Because sellers, if they want to be aggressive, they have to keep building. If they don't build even for 5 minutes, right? Buyers are always there to overwhelm them, overpower them. They will continue to buy and they will obviously push it in that direction. So sellers will have to continuously sell to be able to continue their hold around that ATM strike. I'm saying the moment they slow down, your opportunity to essentially take a buy position and obviously, stay with that buy position. Okay. So I've given you a strategy already wherein I'm saying if you are a seller, sell for as long as the line is going up and when it is consolidating, your chance to exit. If you are a buyer, wait for the consolidation, then take your entry, because consolidation is good. That means the sellers are slowing down, so you can obviously start looking to take your entries from there onwards. Again, analyze always ATM stock.
Price will show here. Yes. Chart you just not open. Yes. Price will show there.
You will see the price at the bottom. However, when you are looking at it in the live market, you will not be able to see it. When you click on this, it will not refresh here. In the live market, I recommend you to go to live charts and Nifty strike view. Look at it here, 24,850. Okay, look at it here. It will do live refresh of this chart. It will also bring live candles here. So you will see live call and put data. You will also see live call and put seller's data and who is slowing down. At 8:50, if I see candles, it was evident that they were slowing down at about 10:13. This started coming down at 10:11, 10:12, 10:13. That was the time, and puts were building aggressively. It was evident that they would never get to that position. So you could take your position from there onwards. This will come early at, like I said, this you will know at 8:50 first. Like I said again, let me also explain this one more time. If you're expecting reversal upwards, it will always come from the strike right below this, which is 8:50. If you're expecting a reversal from this side downwards, it will always, the first place you would notice is from the upside, which is basically we're close to 25,000 or 2550 is the first strike that will tell you reversal is coming, or the ATM strike. Otherwise, once you are in the momentum, always look at ATM strike. For reversals, always look at one strike below if it is upward. If it is down reversal, you always look for one strike above 25,000 or 2550. One of them will give you an early indication. For any day when you look at it, you will notice this. This will hold true for any given day. Now, this is an extremely powerful and useful feature. Like I said, you can also do it here. You can also analyze the same thing here. You can see 3 strikes. We have recently added this feature wherein you can see 1 strike, 3 strikes, or you can see 5 strikes. If you don't like the height, you need much bigger height. You can see it like this as well. Depending on how big your screen is, you can change the height of each of this chart. Makes it easy for you to analyze. Okay. Now, so like I said, I think I've managed to explain you how all of this works, and I've also given you an understanding of how the alpha arc essentially works. Now, I'm assuming that from now onwards, your wrong entry should not happen. Like for example, you can never take a put buy when this line is growing. When the line is down, for example, it has looked down for at least 15-20 minutes. That is when you're looking to take a put buy or a call sell. When this is going up, making higher highs, you're not going to look for a put buy or you're not going to take a put buy or call sell. You will look for put sell and a call buy. Okay. This should help you avoid wrong trades. So 50% of your wrong trades should go away just with this. All right. I'll take a pause. I'll open it up for questions. In case if you guys have any questions, you can, start asking. I'll do one thing. You can raise your hands. Yeah, I'll take one by one. Dhanpal.
Sir, can you go to 24,900 call arch, sir? Particular strike price? Yeah. Sir, and sir, take everything. I don't want candle also, sir. Only I want call sell arch, sir.
Tell me.
Okay. See, from 945 onwards, it is rising, sir. 945 onwards. Okay. From 945 onwards, that arch is rising till 1.8 million. That is like 1120 onward, till 1120. Okay, I'm right.
Till about 11 o'clock.
But from 1120 only, it is on sideways or it is consolidating. After that, that arch is coming down, so the price will go up.
Correct.
That I'm talking about buyer's point of view, not seller's point of view.
Correct.
Okay, but if you see the candle alone below the same.
Sorry.
In the call 24,900 also.
Yeah. 1 second now.
Yeah.
I'll remove all of this. I'll keep the candles for time being, but go on.
But here it raises from 945 onwards, like 85 rupees onwards.
Correct.
But we are getting entry. I'm not talking about entry. But I have a doubt. 1120, if I take an entry, it will be like approximately 110 or something. 110 or 110. Approximately keep it at 110 or 115. But why I'm missing that lower level entry, or I'm not talking about only I can take lower level entry, because when lower level entry, if I get it, my stop loss will be minimized. That's what my doubt.
Couple of things I'll explain to you. Trying to catch the bottom, okay, either here or even here for that matter, is a futile attempt. It is a painful process. It is not easy for anybody to identify the bottom. Nobody will get it. So to get a bottom is impossible. I would believe that you are trying to say, okay, can we at least get it 100? Now look at it on the other side. Given that calls did not give up, and if you had bought it at 100 also, it went back to somewhere 92. Would you have confidence to continue? It went up again, comes back to 100. Would you have confidence to continue?
No, sir.
Then look at, it's a beautiful example. Then look at what happened after 11, 11, 8, 11, 10. Okay, after that you see. So if you look at 11, 08, 11, 09, 11, 8, or even if you look at 11, 20 also, the drawdown is actually quite less. What
Lowest
happens?
will be 115, but that didn't get cut below the lowest level. Yeah.
Why did it
Understood.
immediately push in that direction? Because sellers have slowed down. The chances of it going down are very less because there is no push to go down, right?
Okay.
The push itself is not there. Do you still want an entry here, or do you want an entry right before the rocket launches?
No, before rocket launch.
That is what I'm telling you. So if you notice, right, go back in the platform, look at historical data. Every time you get something like this, right, if you take an entry, it will immediately push the price in that direction. You will not get the rock bottom. You will not get absolute bottom. That I can tell you. I don't think even if we put our efforts, we will not be able to identify the bottom. It will be very, very difficult.
But one thing that 1120 you have shown, no, even that time, if the market comes opposite to our this thing buying level, that stop loss I have seen is very minimal only.
So the advantage is that, so for example, if you had taken an entry here, you would have made a few points, and then while it is
1.8 million. Yeah.
while it is going back somewhere here, you might have taken an exit saying stop loss is it. But then when it comes back again, you take an entry, is no stop loss is it, and the price will immediately go. I don't think I would advocate this kind of stop loss based system, but rather what I would overall tell you is, when this line is coming down, stay confident. Sellers are not increasing. Only when this is increasing, for example, that is when you should be worried. If the line is not increasing, you are confident that the price will definitely go up.
Okay.
When the line is increasing, that is when you are worried.
Okay.
You understand?
Patil sir, sorry for interrupting.
Thank you, sir. Thank you.
Patil sir, Patil sir, sorry for interrupting. Can you, this is after market chart. Can you put the exact time of the 11:20, sir? Then can we predict or not? We want to check. I want to check it. Now.
Look at this.
Okay.
This is not even 11:20. Let's look at slightly before.
Please take the candles out, sir.
I'll take the candles out for you. No problem. Sorry.
Okay, now move 1 minute by 1 minute, sir. Can we grab that moment or not? We want to check.
So look at this. Okay, for example, making higher high, higher high, higher high. You tell me when it slows down. When you think it has slowed down, you tell me. Okay. Do you think it has slowed down?
Now I am feeling it is slowed down.
11:13. It is not 11:20.
Little
My point to you is, you will be able to spot it. Obviously, you will be able to spot it.
Okay.
It will not be difficult. You will be able to spot it. It might require a little bit of looking at it on a daily basis. My suggestion is, observe it for a few days. Market is not going to. We are not going anywhere. Market is not going anywhere. Don't trade. If you master this, you know that you have got a beautiful opportunity. Think about it. It is as simple as saying, if the sellers slow down, take an entry. If the sellers are increasing, don't take an entry. It is as simple as that. Right? So,
sir, one more point in that, when we are looking call, no, if we looked up put alpha, whether it is increasing or decreasing, we can come to one conclusion. That is my point.
Even better. Very true. Even better. So if you look at 24,900 only. So fine. Call is slowing down, but is put increasing? Put is increasing like crazy. Put is increasing like, they are on some kind of steroid. Isn't it? Puts are increasing. Devigoda ಅವರೇ ಇನ್ನೊಂದು ಕ್ವಶನ್ ಇದೆಯಾ?
ಸರ್, ಇನ್ನು 2 ಕ್ವಶನ್ ಇದೆ ಸರ್. ನಾವು ಇದು ಆಲ್ಫಾ ಲೈನ್ ಯೂಸ್ ಮಾಡ್ಕೊಂಡು ಯಾವ್ದಾದ್ರು ಒಂದು ಸ್ಟ್ರಾಟಜಿನ ಪ್ಲೇ ಮಾಡಬಹುದಾ? ಅದು ಯಾವ್ದಾದ್ರು ಸ್ಟ್ರಾಟಜಿ ಇದ್ರೆ ಹೇಳ್ತೀರಾ?
ಬೆಟರ್ ಇಸ್ ಸೆಲ್ಲರ್. ಓಕೆ, ಲೆಟ್ ಮಿ ಎಕ್ಸ್ಪ್ಲೈನ್ ದ ಸ್ಟ್ರಾಟಜಿ. ಇನ್ನೊಂದು ಎರಡನೇ ಕ್ವಶನ್ ಏನ್ ನಿಮ್ದು?
ಸರ್, ಇದು ಆಲ್ಫಾ ನಲ್ಲಿ ಮೇಲ್ಗಡೆ ಹೋಗ್ತಾ ಇರುತ್ತೆ ಆಲ್ಫಾ ಬಟ್ ಏನಾಗ್ತಾ ಇದೆ ಅಂದ್ರೆ ಮಾರ್ಕೆಟ್ ಡೌನ್ ಆಗ್ತಾ ಇರುತ್ತೆ ಕೆಲವೊಂದು ಟೈಮ್ ನಲ್ಲಿ. ಮತ್ತೆ ಆನಂತರ ಮತ್ತೆ ಮೇಲ್ಗಡೆ ಹೋಗುತ್ತೆ, ಬಟ್ ಅಷ್ಟರಲ್ಲಿ ನಮ್ಮ SL ಹಿಟ್ ಆಗಿರುತ್ತೆ.
ಯಾವ ದಿವಸ ನಮ್ಗೆ ಯಾವ್ದಾದ್ರು ಒಂದು ಎಕ್ಸಾಂಪಲ್ ಹೇಳ್ತೀರಾ ಆ ತರ ಆಗಿದ್ದು?
ಬಹಳಷ್ಟು ಆಗಿದೆ ಸರ್. ನಾನು ಆಕ್ಚುಲಿ ಇವಾಗ ಬೇರೆ ಕಡೆ ಇದ್ದೀನಿ, ನಂಗೆ ನೋಡ್ತಾ ಇದ್ದೆ. ನನ್ನ ಟೈಮಿಂಗ್ ಹೇಳ್ತೀನಿ ಸರ್, ಅದ ಯಾವ ಟೈಮ್ ಏನಂತ ಹೇಳಕ್ಕೆ.
ನನಗೆ ಡಿಸ್ಕಾರ್ಡ್ ಅಲ್ಲಿ ಹಾಕಿ ಒಂದ್ಸತಿ.
ಓಕೆ ಸರ್, ಓಕೆ. ಇದೊಂದು ನನಗೆ ಸ್ಟ್ರಾಟಜಿ ಒಂದು ಹೇಳ್ಕೊಡ್ತೀರಾ?
Basically, okay, I'll explain you guys on one important thing. I was explaining this in a call yesterday as well. A lot of times, the biggest problem for all of us as traders is this. We lose a lot of money on days like this. We lose everything that we earn on days like this. So to avoid this, and this will also help you on other days also, I will strongly recommend all of you to take trades only when the price reaches a strike. Okay, for example, either you take an entry at 24,600 when the price hits 24,600, or when the price reaches 24,650. Okay, when the price reaches 24,650 at 944, question is, do you think it has enough to go, or it has got enough power to go to 24,700 or not? You do your analysis based on this. Decide whether you think it has enough power potential. You'll also have to click on it and see who is raising and who is falling. You have to decide whether do you think it has enough potential to go to the next 50 or not. Based on that, you are either taking a call buy or a put buy. If you take your positions at strike, the advantage is your entries are most likely going to be better. And when the market goes sideways, you will not have a lot of problem because it will tend to stay around that strike itself. Even if you had taken a call buy, the price, when it comes back, you would exit at either at cost or at a slight loss. Even as a buyer, this will work. But as a seller, it is even better. So my strongest suggestion is make a habit of always taking your entries when the price is around a strike or when price is reaching a strike. That means the moment price is coming to 650, take your entries there. You will easily be able to manage the sideways market. Given that you are understanding, if not here at this stage, for example, you understand that it is not going to go up, take a put buy or take a call sell because this was strong on that day. But you will take your entry will be here, somewhere here or somewhere here. It's a perfect entry. You don't have to guess whether to take an entry here, L entry, where, you don't have to really think about where to take an entry. Take it always at the strike. You will be able to handle sideways market gracefully, believe me. And the same thing will work on other days as well. You may miss out a little bit.
Strike price, click on that strike price at that time.
I'll explain to you. Now that was an expiry, okay? So as a buyer, I would always recommend take one in the money, okay? Let's see, left 1037, right? I would, especially on expiry, I wouldn't recommend you to take out of the money and all that. ATM strike, you're going to take, let's assume that you're going to take a put buy. 1037, okay? See, look at this, 1037, it went up. For some reason it went up, you missed, you obviously had a good opportunity to make money on that day as a put buy. But what I'm saying is, even if you don't make money, let's say if it goes down against you, you would still be able to come back and exit at that level. For example, let's say we will take from here, we are assuming it will, let's say here, 953. Rather 953, take this example at 953, right? We 952, 953, whatever. We would say that, okay, the price has to go up. We are assuming this is very strong, so we want to go up. So we want to take a call buy, okay? 24,600, 953 call buy. Okay. 953. How much was it for? It was actually at 83, 84. The price came back to 84, 85, 86. The price came back to 84, 85, 86, somewhere about 81, 82. During that time, before the pressure obviously intensified from the top, you had your chance to basically come. Even if it goes against you, you still have your chances for the price to come back. It will not melt a lot. But understand that your analysis has to be correct. You cannot say
वॉल्यूम एनालिसिस का चेक करना पड़ेगा, वॉल्यूम का चार्ट का चेक करना पड़ेगा ना।
हाँ, तो देखो कि 700 पे क्या हो रहा है। फॉर एग्जांपल 700 पे कॉल रुक रहा है क्या, देखो 9:35 से कॉल, एक तो कॉल 700 पे कॉल छोड़ ही नहीं रहा है और वो रुक रहा है क्या, देखो वो रुक ही नहीं रहा है। तो चांसेस है क्या 700 जाने का? वो जब तक वो नहीं रुकेगा 700 कैसे जाएगा बताओ? अनलेस calls at 700 give up, there is no chance for the price to go to 700. Why market goes sideways? the market goes sideways, one big reason that it goes sideways is because both call and put are building closely for the entire day. Look at this. I'll remove the alpha line. Look at this. They only had a gap. Again, they came back close. And the other problem is from 700 calls don't give up. Just don't give up. And from 600 puts don't give up. Puts just don't give up. For a moment they gave up and then they again started building. For the moment they gave up and then they again started building. ऊपर से ये नहीं छोड़ रहा, नीचे से ये नहीं छोड़ रहा, कहाँ जाएगा प्राइस? But you would be able to survive it if you take an entry at the right position. That is one important lesson for all of us, for that matter. And this we were able to do it because we have done a lot of simulations ourselves, and finally we realized that the only way to survive a market like this is if you enter at strikes. So decide whether it will go to next 50 or not. When it comes to 650, decide it has a chance to go to next 50 or not. If you think it has a chance to go to next 50, call buy. If you think it will go down, put buy. That is an extremely easiest way to trade and most efficient way to trade, if you ask me.
So can I do it? So in all this, the important question is, where do you put your stop losses? Because we are, everyone teaches us, or we are taught from the beginning, is that you keep a nearby stop loss because you don't want to lose big and you want to earn big. So there is always this dilemma of keeping stop losses in the appropriate places, even if you say that the price comes back to the strike that you have opted earlier, but then your stop loss is getting hit, you are out of the market.
Of course it is hit. Stop losses obviously will be hit. Now, if you want to manage it from stop losses point of view, my first answer to you is, when the price was here, you buying a call buy just doesn't make sense, because calls were raising at the top. Calls never gave up. Why would you do a call buy when it was at 943.53, whatever here? Okay, that is the first question. Second question, our platform, we have always told you, if on that day obviously you didn't have enough good entries, but if you look at on a days when market is essentially moving, today's example only I gave you, right? 900, when you are looking at it, we told you not to buy anytime here. When the calls are raising, don't buy. When they slow down, that is when you take your position. You have much better chances of hitting either a very, very small stop loss or taking a very good entry. You understand? So two things I'm telling you. If you want to manage your stop loss, make sure they slow down. And then it is up to you whether you want to take this line as your stop loss or not, or you want to have, with confidence, you want to continue. That's up to you. How much risk you want to take, how you want to take a risk. I will not tell you 5% stop loss, 2% stop loss. It doesn't work. It is always up to the trader.
I think it is better not to keep stop losses, because you're going to get killed in that pursuit.
It is up to an individual. Everyone's style. Individuals, this thing. I wouldn't say you shouldn't put a stop loss at all, but decide, right? If you want a stop loss, either go by this line, or if you think the line conviction is very high, the line is growing very high, wait for some more time and see, and then wait for this, for example, this candle high to be broken, right? If the next candle comes to somewhere about 1.8 million, 1.9 million, I'll exit. Maybe that can be a better stop loss strategy. I don't know. It depends on your risk appetite.
But I think it plays a major role, I think, because practically when we look back in the history, it's all fine and good, but practically on the ground, in the live market, this is a big factor, and I think most of the traders are getting killed in stop losses.
Yes, absolutely. I completely agree. Not just in stop loss, in the wrong trades, not getting the right entries. That is why I'm saying your entries cannot be mistaken. I told you, I think somebody asked the question, right? I don't remember the name. I am telling you not to take an entry here. While the line is growing, don't take an entry. When it is slowing down, start taking your entries.
Yeah. Right, sir. Thank you.
You will never have a problem when the line is slowing down. Only when the line is not slowing down, if you are taking an entry, you will be in trouble. maybe you will have 1 or 2 trades, but second or third trade, you will definitely have a very good trade. And the first 1 or 2 trades, your stop losses will be very, very small.
Yes. Yes, sir, I understand.
Sir, this is Sudarshan.
So before Sudarshan, before you ask a question. Sorry, Sudarshan, 1 second. Sudarshan, 1 second, I'm sorry. So everyone, जितने भी लोग यहाँ पे हैं, कन्नड़ದಲ್ಲಿ ಇರೋರು ಎಲ್ಲರೂ ಕನ್ನಡದಲ್ಲಿಲ್ಲ, जितने लोग हिंदी में हैं, आपको चार्ट मैसेज देखिएगा, अगला हिंदी क्लास का आपको वहां पे लिंक दिया गया है. ओके, आप चाहे तो अगले हफ्ते वो क्लास है, वहां पे आप ज्वाइन कर सकते हैं. ಕನ್ನಡದಲ್ಲಿ ಯಾರೇ ಇದ್ರೂ ನಿಮಗೆ ಇನ್ನೊಂದಲ್ಲಿ ಲಿಂಕ್ ಕಳಿಸಿದೀವಿ ನೋಡಿ ಚಾರ್ಟ್ ಅಲ್ಲಿ, ಕನ್ನಡದಲ್ಲೂ ನಾವು ಕಂಟಿನ್ಯೂ ಇನ್ನೊಂದು ಸೆಷನ್ ಇದೆ ನೆಕ್ಸ್ಟ್ ವೀಕ್ ಅಲ್ಲಿ, ನೀವು ಪುನಃ ज्वाइन ಮಾಡಬಹುದು. ओके, सो हिंदी में जो भी ज्वाइन करना चाहते हैं, चार्ट देखिए, चार्ट में हमने लिंक दिया है, अगले हफ्ते है, अगले हफ्ते आप ज्वाइन कर सकते हैं. ठीक है, ओके. मेरा I have a network problem, so I'll take a few questions and then I'll have to wind it up a little early. But anyway, Sudarshan, go on please. I'll try to go on for as long as I can.
Okay, sir, I have 2 questions. One is initially after the market opens, usually I think both the call and sell, I mean, both lines are moving in upward direction. So based on your experience, is there any like ideal time, or maybe we have to wait for 5 minutes or 15 minutes to notice the change? I mean,
No,
the difference.
Unfortunately, that is an issue for sure. In we have right now.
Okay.
Morning hours, if you are looking at lines slowing down, no, you will miss out trades in the morning for sure. You will definitely miss trades in the morning. If you are going by this in the morning, don't go by this. Go by support and resistances in the morning. Only after 10 o'clock, 9:30, 9:45-ish is when this slows down, and that's when it gives you a better confidence.
Okay. Because when we show candle, there will be a gap between the candles and the arc. So it's a bit confusing. So I asked, is there any ideal time? I mean, how much time we have to wait?
There is no ideal time to trade per se, but then the candles and the line slowing down doesn't work till 9:30, because in the morning it looks like both of them are building. One way to make a difference is the gap between call and put. If call and put, the gap is significantly high and the top guy is continuously building positions, that means you can confidently say that they will hold that strike.
Okay, fine. And the second one is, you said the data is not updating when we click on the strike price, right? Then and you showed it is updating by every minute. So which are those two? Can I?
So when you click on this, no. If you are watching this, after 1 or 2 minutes, this might not refresh the data here.
Okay.
If it's still showing old data. Instead, we recommend you look at, either you can look at this, for example, click on this and you can analyze the same thing here. Or we have given you a separate option, strike wise view, you can analyze it here, 25,000. You can just add the strikes, click on it, and when you click on the button, this will refresh automatically. And even here you will have price.
Okay, here also we can see 2 or 3 strike prices at a time, right?
Yeah, you can add them, 24,900, 24,950, like that. You can add as many strikes as you want and just change. Just click on the button, it will tell you which strike to. It will show you that particular strike. Yeah.
Okay. In the other, there are in the basic, the first chart only, there is an option at the bottom, right? Multiple strike waves.
You can do that also. Now
there also it is updating, right?
Yes.
The strike wise seller trend.
Every minute it will refresh. Yes.
Okay. Thank you. Clear. Thank you.
No problem. Baiju?
Sir, actually, initially there was a audio problem. Will I get the recording of it?
Sorry?
Initially, I couldn't hear anything.
The recording will be made available. Discord, we will share the link in the Discord, Baiju.
The Discord, which link, sir? Discord?
In the website, you have Discord link. You can go to, in the footer, in the website footer, there is a Discord link. If you join there, right? There otherwise you can, Mr. Srinidhi has shared the Discord link in the chat. You can look at that. In the chat, you have got the Discord link now. Please join there. Otherwise, look at YouTube, our YouTube channel. There also you will, you will see as soon as we upload it.
Okay.
I'll go to Mr. Francis.
Sir, one more thing, sir.
Yeah, bhai.
Hello? Sir,
Yeah.
I have taken the subscription today and will I get any training?
So we are essentially doing these webinars only, Baiju. Join the Hindi classes next week. We will again do a thorough review of the entire platform and will reveal some more strategies also to you.
Okay.
Take it. Mr. Francis. Hello, Francis, can you hear us? You are on mute.
Hello. Good evening, buddy, sir.
Good evening.
I'm very happy to talk to you. Actually, last week I come across this website. I gone through all the documentations. I watched 4 videos of you. I back tested using your system. It works fine. As a bias point of view, most of the retail traders are losing as significant, but this system helps us a lot. I have only one doubt. When this trend line is above 0, take the call. I can go with the trend. Sometimes this future chart is below 0 line.
Sorry, which is below 0 line? The alpha you're saying?
In the future chart,
okay.
The difference
Ignore
is below 0.
Now,
at the same time.
So look at this trend line. Go with the trend line because this trend line takes this also into consideration.
Okay.
I would recommend, if you are looking at it, I would recommend look at the diff. If diff is not giving clarity, you can ignore it completely. If diff is raising, if this is raising, you can combine them both. Because when you look at just these two, it looks like sellers are more, but it doesn't tell you that buyers are increasing. The diff gives you a better idea.
Okay, thank you.
No problem. And thanks for your kind words, Mr. Francis. Vijay Kumar Pulikonda.
Hi, Patel ji. See, right now, I would in the videos, whatever the earlier videos or our YouTube channel, I could see it is handling the trending market. In today's session, you explained how to handle the sideways market, taking the strike where you can pick it and all. So if you can create a small snippet of sideways market, that will and upload it to our channel. That will really help because see, it has a mix of Hindi, Kannada and English, so it was tricky for me to understand completely. So maybe if you can put that, it helps a lot of people.
Yeah, we'll definitely. I think I'll take that point for sure, and we will add some videos how to navigate sideways market in all 3 languages.
That will really help. And just if possible, on the chart, is it possible to draw plot line? That's it.
I know that is a feature that is there in the pipeline, Mr. Vijay. యాడ్ చేయడానికి మేము పైప్లైన్ లో ఉంది ఎప్పుడు యాడ్ చేయగలం అనేది తెలీదు బట్ డెఫినెట్ గా
maybe if not see maybe yesterday high yesterday low can we by default can we do instead of giving custom that gives the range of the day or outside the range
for the price you are saying.
Yesterday high yesterday low for the price. That's it.
If you ask me for the price, right, our team will immediately say no because we don't do anything on price. Believe me, even yesterday's high and low also, we don't look at price at all when we are looking at our platform.
Why I was asking this is most of the time trend comes after that. So just thought I agree because there are some things where a platform founders will consider that maybe your view, but that helps. Just a thought.
We'll pass it on. But if I tell them saying that we need to add lines in the volume charts, they'll listen to it, the entire team. If I say anything on the price, they will say, there are enough, and I agree with their point, right? There are enough platforms doing a brilliant job on price. TradingView, Angel One
See,
guy
because
is
like
grown.
we are not focusing on price here. I understand, because like we see what we see is the like future volume difference and the OI difference and a bit of a chart. That's it, right? Like OI volumes. So most of the time, what I see is these are all good, but when there is a break of yesterday high, yesterday low, market picks up fastly most of the times. See, I'm not saying
Understood.
every time, most of the time. So like by default, if we can keep the range of yesterday high and yesterday low, so that will confirm our trend without looking at the other chart. See, like now what I'm saying is like looking at the Nifty chart and drawing the yesterday high, yesterday low. So if that is
Understood.
also considered here, maybe that helps. That's it.
We'll definitely take it as a feedback.
Rest of all, like I don't want to comment. You guys are going very good.
Well, sure. Thank you so much. Appreciate it. I'll definitely pass it on to the team. I'll ask them if we can allow maybe drawing levels. Actually, if you ask me, right, there was an idea. You know that in our platform we do something called as support and resistances. For example, on 18th, we had levels. We look at it as you look at some of the videos. We talk about support and resistances. End of the day, we look at support and resistance. We say that I might not be too confident 950, but 950 to 25,000 is my resistance. Support is that 800 to 850 is definitely support, right? That's how we look at it. And then today morning we again get up in the morning, see where the price is. It is at 800, 850 level. That's my support zone. We take a position from there. This support and resistance concept works beautifully, and it worked today also. 25,000 was resistance. If puts are slowing down at 25,000, we take a put entry and we basically make some revenues with that also. You look at.
Sorry to ask you again. Can you just repeat the same example, like support and resistance?
So, I'll repeat. Let's say that yesterday, today's market only. If you look at it, yesterday, if you're looking at yesterday's, where do you think support? End of the day, when you're looking at people who have not exited their positions, based on that, where do you think resistance is?
25K.
24,950 to 25K. Where do you think support is? Strongest, the support where you don't think price can go below that.
24,800.
850 to 800, this range.
850 to 800.
If price comes to
I'm a bit conservative, so I'm taking the one strike below. So one strike below.
If the price comes 800 to 850, you would be prepared to take a buy position, call buy. If it comes to 950 to 5,000, you are prepared to take a put position. That's how we basically analyze, do support and resistance. And believe me, it works beautifully. 850 was the level where it pushes back. 25,000 was the level. Again, the 25,000 level, we will try to see calls slowing down, rather put slowing down. If the put slow down, that's when you take a put position. Simple.
Okay. Cool. Thanks.
No problem. I will take Mr. C. I'm not getting your name.
Sir, Chandrahas Naik.
Chandrahas Alva. Chandrahas, please go on.
Yeah. So one basic question. Maybe I'm missing the very basic thing. The fourth chart. This Nifty strike wise sellers volume. Now this is not an open interest balance carry forward. This is the sellers volume on that particular day. So when we click on at when we come at 9:16, this we have to understand it as the day's volume built in just 1 minute.
Yeah,
first minute.
Only 1 minute, correct. And
First
believe
minute.
me, in 1 minute you will know plenty. I'll give you an example. In just 1 minute, you can tell me what is happening. I'll give you so many examples. 25th April, I think. In 1 minute, and there are so many examples we explain just with this. 25th might not be the best example. Give me a second, I'll tell you. In 1 minute. 1 second now. I'll give you an example so that you yourself will be able to say, okay. You draw your levels based on yesterday anyways, and then you can immediately say what's happening just in the first minute itself.
Yeah.
Tell me, what do you think will happen? First 1 minute data. What do you think should happen to market?
Yeah, the puts are strong here.
it should ideally go up. And on that day, if the price happened to be in your support zone, even better, you will take a call buy. That is what could happen.
Yeah.
So 1 minute data is also sufficient. I'm saying look at yesterday's data to draw your support and resistances. That will also give you a lot of confidence.